Test. Audio test. Okay, hi all and welcome. Welcome to another edition of a midday market review. Live trading, key trading levels, and popular trading setups for some indices, FX, and also a few commodities. So my name is Phil. I'll be your presenter today. If you are looking for the community of traders, you can check us out at TraderCast.com. If you're brand new and you're looking for some education or learning how to trade, check out mytradingskills.com. You'll find some of my courses there. Some of them are free, and all you need to do is just check them out, see if you like the way we teach, and if you need help with anything else, let me know. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I taught many people how to trade. Some of them were brand new, and some of them were people who traded already and needed help with a specific area of their trading activity. A big disclaimer here, because I'm broadcasting this on YouTube live, so some of you are brand new, some of you have been traded before, and I do not have the indication of your personal investment and trading objectives. What I'm showing you here today is I'm showing you some specific levels which I would be looking to react to and possibly use to initiate my trades. I'll tell you exactly what I'm looking at, but these are my opinions and experiences only. And I'm doing this as a proof of concept because I firmly believe that what I'm doing here today is what a novice trader or possibly early stages intermediate trader should be able to do. So I'm keeping this very simple. No complicated indicators, no complicated strategies, no complicated terminology. It's just very basic approach to trading and so on. Now, here we go. A couple of things that I'm looking at the moment from the current open positions. Today is the 8th of February. This is 1:45 afternoon my time. US markets are opening up in about 45 minutes. I have short euro dollar, and I initiated this trade early on today. This is the intraday scalp at 1:14.16. I'll show you why I did that. My stop loss is very tight. It's at 1:14.30, and I'm looking for the extension to the downside, possibly towards 1:13, maybe even lower. So from the risk to reward ratio, this kind of makes sense. So I'm going to close this now, and I'll show you. Firstly, I think I'll show you that trade first, and then I can go in and tell you about a few other markets that I'm looking at and the levels which I would use to potentially initiate the trades in. Here we go. So this is a 15-minute time frame chart. For those of you who know the time frames, this means that each one of these little candles is worth 15 minutes of trading, and I've decided to enter here. So low, that's my previous support. Once we break through that, it becomes resistance. This was the level of interest to me. Decided to go short, and my stop loss is up here, about 13 points on the upside. I'm currently in the money here, so it's a small profit here, and I would like to take profit towards 1:14. So let me just change the time frame and show you what I would 1:13. So here we go. So my limit order would be down here, 1:13. This area here is definitely of interest. Previous swing high at 1:13.25, 27. 1:13, nice and round number. And then this area here, 1:12.70. Loss of this area could potentially open the way for deeper corrective pullback towards 1:11.50, even 1:11. I will be taking partial profits as I go along. This is only a small position. For those of you who watched these sessions before, you know that from the intraday point of view, I tend to take partial profits and then move the stop loss closer to entry or at entry if I have the chance, and therefore protect myself. So that's where I am with this trade. I'm going to leave it running. It's a very tight stop, and this might be stopped out throughout this session at the moment. Okay, so there is a small risk of about 13 points on this trade for me. A couple of other things that I'm paying attention to from the indices point of view. I am looking at FTSE, and let me show you that one first. So the FTSE position that I am paying attention to is at 75.20 or that. Let me just delete some of these annotations, and then they'll make sense. So what I'm looking for from a FTSE point of view is potentially for the price to carry on falling, and come down to this level, this area here, 75.20. And then I would like to see a pullback to that level and then a rally from there to the upside towards 76.45, 76.50, which is this area up here. Okay, if that's the case, I would likely put my stop loss down here towards 70, 74.90, possibly even 74.60 if I, depending how I get in. This is the 4-hourly time frame, so this could be a swing type trade, which could be open for a number of days, maybe even a week. If it's an intraday trade, I'll put my stop loss much tighter because the position will be higher, or sorry, larger, and so on. Just making sure this is all okay. Test, yes, it's all okay. So this is the initial level of interest, 75.20. I'm looking for a pullback, and then in here I will be looking to find a setup that looks like this. So red candle followed by indecision followed by green candle, and this green candle should be at least 50% as big as this red one. If I see that here, that would likely be of interest to me. Also, if I see a hammer forming here, so basically a wick with the body closing above this area here, that indicates a buying pressure, I would likely react to that as well. There is another example of the same setup that I showed you here, just larger in here. So that's what I'm looking for in relation to FTSE, with a view to potentially take profit at 76.45, 76.50. I have a pending order with this trade, so just in case if I'm busy talking to you, and if that happens, I might be filled. But I would like to pay attention to this and see if the price gets to this level, and then how the price action settles and how the candles form before I decide to do anything. The other thing that I'm looking at the moment from the European indices point of view is German 40, or the DAX index, or DE40, as some brokers are calling it. The key level of interest for me is at 15,260. So this green area here is really. Apologies, I think I have my. Sorry, I had my news feed on as well, just in case if some breaking news come up. This is 15,260. That's definitely an area of interest for me. This appears to be, for those of you who watched some of the kind of previous sessions that I was doing on YouTube as well, you know that I was referring to this as a sideways consolidation that potentially could morph into something quite bearish. This becomes a shoulder, head, and shoulder. This normally precedes a kind of a topping formation, and the way they play out to the downside, retest, and then they carry on moving lower. We don't know if that's the case just yet, but that's what it's starting to look. And we need an end of day close below 14,490. Sorry, 14,000. 940, 14,940, 14940. An end of day close below there for a potential confirmation of this and an extension to the downside. Then it becomes something a little bit more serious and concerning and more corrective in nature. So far from the kind of daily point of view, there is a sideways consolidation. There is no trend here, and then this is the 4-hourly, and I've referred to these on quite a few occasions in the past. They are bearish continuation patterns. They're known as flags, and basically the way they react to is they have the tendency to break to the downside and then retest that previous support. Actually, I'll just draw it down here for you so you know what I mean. So there is a little resistance here, and there is a support. So we have high, lower high, lower high. This is forming another lower high, and the way this works normally is we see a flush lower, then a retest from underneath, something like this forming here, and then we see another leg lower extension to the downside, and that leg lower is normally measured as a kind of symmetrical move from the previous consolidation, and then you extend that to the level of the breakout.
Player disconnected.
And then it becomes a symmetric. Sorry, I'm just hearing something. I don't know if you can hear it as well. So then it becomes symmetrical extension to the downside, and then the price comes down here. So I'm paying close attention to DAX. I would be happy to short if I see something like this develops, with a view to put my stop loss at 15,260, 15,300, with the view to take profit at 14,941, 4940. And if you remember, that's the daily neckline of that possible sideways consolidation. So anybody who is looking to short this particular market would likely take some partial profits around there just to protect themselves and so on. The alternative view would be if I see a rally from here, so the price doesn't dip lower, the price rallies and creates a push above 15,260 or 15,300 area, and then I see a retest from above, and then this creates a higher low. So low, higher low, higher low, another higher low, and a breakout above this resistance. So this is the important bit for me. So if I see a breakout above this resistance and a 4-hourly or a daily candle closing above here, then potentially that could trigger a short squeeze, causing for a price to spike higher, and I would be happy to go long at that point in time, with the view to take profits up here towards 15,500. So possible long entry for me would be at 15,260, 15,300, around that area, with a stop at 15,200 to the downside. So it could be 60 to 100 point of risk, with the view to potentially take profit higher towards 15,500. So if I say it's 100 points of risk for potentially 200 points of gain, that'll be 2-to-1 risk to reward ratio. Not my favorite risk to reward ratio, but I'll take it. So that's where I am with the DAX at the moment. I have nothing open, paying close attention to it, and would be looking to react to this fairly quickly. I don't have the pending order on this. I would likely be trading this at market or looking at the price action and then deciding on what to do. For those of you who follow economic data releases, we have some US economic data which is coming up today. US goods and services trade balance, which could potentially
seeing the effective Fed funds rate unchanged on February the 7th at 0.08%.
which could possibly trigger some volatility across US dollar and then some of the other equity indices in US as well. Okay, the other thing that I'm looking at from the US point of view, and I'll talk about US equity index called Dow Jones, and then I'll cover gold and oil because I have a couple of positions that I'm closely paying attention to in gold and oil, and then I'll do some currencies as well. And I've shown you my short euro dollar already, so I'm short euro dollar already.
We're getting the ECB data here. So ECB's bond holdings under PEPP came in at 1.65 trillion as of last week.
Effective Fed funds rate 0.08% February, 7 versus 0.08 February. Okay, so nothing there. Peloton says use of cash is fiscal, nothing. Aluminum as the US would say, reaches its highest level since 2008 in the London Mercant LME metal exchange, edging towards a new high. Euro dollar marginally lower, but traders lean against 100-day moving average. Are NFTs meaningful? Aluminium high. Macron, Putin told me that he would not.
So seeing the ECB bought a net 16.516 billion euros of the PEPP bonds in the week of February the 4th. That's up versus 14.688 billion euros a week earlier.
Sorry, just reading a couple of these.
So overall then, the ECB bought a net 17.208 billion euros of assets last week.
Okay, this is Dow Jones, and in my book, this potentially looks to be quite bearish.
And looking further into that, so they bought a net 17.208 billion of assets last week as part of its QE program. That's below the 22.091 billion euros it purchased a week earlier.
This appears to be a rising wedge against the overall uptrending market. So we saw this corrective pullback, rising wedge. They have the tendency to create a little bit of a pause, and what I'm seeing this here is I'm seeing this as an energy buildup. We have a slightly sequence of lower highs and slightly sequence of higher lows. So there's an energy buildup. There's a coiling price action.
Disconnected.
And they have the tendency. So I have no idea what's going on here. I'm going to mute it for now. And they have the tendency to have explosive reaction. So bullish traders are looking for a breakout above 35,300, and they are looking for a push higher. So basically there is that coiling price action that I was telling you about. Coiling, boom, off it goes. So bullish traders are looking to see a breakout above 35,300 with a view to take partial profits at 35,680, 35,700, and then above that we have 36,200, and then this area up here towards 36,900, 37,000. The other alternative is if that doesn't happen and we see a bearish reversal. So I'll change the colors here. So if I see a bearish reversal and a rejection here and a dip lower, and then in particular something like this. So imagine this trend line being intact, and then we are seeing push lower, and the red candle closing below this sequence of the highs. So this is what I'm looking for. So dip below here, 35,100, 35,050, thereabout, and then possible a little retest from underneath. So support, runs broken, becomes resistance, and then from that point I see a fairly decent selling pressure like that. I would be happy to go short with a view to put the stop at 35,300. So yet again, it could be 150 point of stop loss or 150 points of risk for the potential extension to the downside towards 34,800, 34,600 to the downside. So that could be 200 to 400 points of potential gain for 150 points of risk. So happy with that. I would be very, very happy with that, and I would likely react to this trade fairly quickly. I have nothing here at the moment. I don't have any pending orders. Silver, no, I don't want to do that. My euro dollar, I'm just going to leave it here for now. Keeping an eye on that euro dollar trade. I'll show you that again. I can see a few more people coming up now. So that's where I am with the DAX at the moment. Sorry, Dow Jones. Apologies, I've covered DAX already. There we go. Looking to see what might happen here. Yet again, for those of you who came in a little bit later, my current open position is short euro dollar. Short euro dollar. I've decided to get in here at 114.17. Previous low, previous low, previous low, previous low. Challenge broken. I got filled here. Happy with that. Really happy with that. The stop is currently up here, about 12.5 points, so about $61 of risk in money terms, and my take profit is lower, initially towards 1.13, possibly even lower than that. So currently keeping it open, and I'll keep you updated. If I see a rally and a push through this entry area and a green bullish candle closing above, I would likely close myself. I would close this position. So I would close my position. I would get out of this. I would close the position myself rather than waiting for the price to reach the actual stop loss. But for now, leaving it as it is. Looking to, it's only a small position anyway. I'll keep you informed and let you know what I'm doing with this at the moment. Okie dokie, so that's my euro dollar here. Let's talk about a couple of commodities, gold and oil. I have a couple of really interesting levels that I'm paying attention to for gold and oil. So this is gold. Gold
expiries for Tuesday
in end of day time frame.
There's 1.3 billion rolling off at 114, the figure, and then looking at cable with spot currently trading 135.43. At 135.60 we've got 1.53 billion rolling off, and then at 134.95, 135.10 there's 1.05 billion rolling off.
This is gold. It's uptrending here with this slightly rising trend line. It's a nice angle. It's not too sharp. It's a nice angle. And what I mean is it's not like this.
Rolling
This
off
was a
1.02
trend line as
billion
well.
of calls, and then for the cable 135.60, 1.53 billion rolling off with 769 million of those being calls. We do have the full option expiries via Forex Flow on the board for those interested.
So the for those of you who are who are going through courses as well, you know that I'm talking about the angle of the trend line. The steeper the angle, the more likely it is that it might break. Not more likely, but if it breaks, it appears to be weaker than the trend line, which is kind of nicely rising higher. So this appears to be all very healthy for me at the moment. So there's a nice buying interest. From the key trading level for me is at 18.10. What I would like to do is So I'm looking at this. This is oversold bounce back. I would take fib high to low. This is 61.8. So really the price should do something like this, have a corrective pullback from here, and that would be healthy. There's nothing wrong with that, okay? And then what I would like to see, I would like to likely react to that level and look to find a confirmation to buy around there, 1810, with the view to put my stop, what did I say here, at 1800. So that my stop would be down here. So this would be $10 in price of risk, and I would like to take profit towards 1831, which is up here. So this is my potential reward. So 1, 2, so 2 to 1 risk reward ratio. Not the craziest kind of setup, but happy to react to that. I have a pending order with this, so if this happens, I might be filled while I'm talking to you. Might not happen while I'm doing the broadcast. It might happen in the afternoon, and in that case I will reassess everything and decide on what to do. But I'm bullish gold as long as it stays above 1810, and end of day close in particular below where my stop loss is at 1800, it would negate my outlook, and then I would choose to kind of look for shorting setups instead of long. But I'm bullish gold at the moment. I'm bullish gold at the moment. So let me just put this down here for now and show you crude oil. I would like to show you crude oil. I am bullish crude. Now, a couple of reasons for that as well. We have inventories coming tomorrow. There is some correlation as well with the geopolitical uncertainty. So Macron and Putin met, and I was just reading this earlier. Macron is saying that there is transparency in that Russia will not invade Ukraine or something like that. Kremlin denied that very quickly, but that's seen as a positive, and probably what most of the people don't really realize in relation to crude oil is that nuclear negotiations are starting with Iran again, and indications are that they might be progressing positively, which will then enable Iran to start exporting oil by the end of the year. If that doesn't happen, then obviously that has impact on the potential future level of supplies, which is pricing in that inflow from Iran, and that has direct impact on the price of crude oil as well. Sorry, while I'm talking to you, I'm paying attention to this euro dollar trade here, and it's not selling off. It's going close to my entry. What I'm going to do is I'm going to pay attention to this, and if I see a breakthrough here, I will likely close my position before it hits my stop. I'll tell you what I'm doing. But that's where I am at the moment. That's where I am at the moment with euro dollar. So crude oil. Crude oil is uptrending, very, very nicely uptrending. Corrective pullbacks rally, corrective pullbacks rally, corrective pullbacks rally. So this was a consolidation here. So that level is fresh in the memory of crude oil traders, and they would likely react to something like that. What traders would likely want to do, they would like to see a pullback to $88 per barrel, and then they would look for a bounce of that. I am in that kind of group of people who would likely be looking to buy oil again around 88. Actually, I have a small pending order at that level. And the stop is at the cluster of these lows towards 86, possibly even 86.50. So there. So it could be 150 to 200 points of risk. $2 in price of risk. So this would be the risk for me. If I see a pullback and a reversal and I get filled there, I would likely be looking to take profit towards this swing highs at 93. So from the risk to reward ratio point of view, this could be up to 500 points of potential gain for the risk taken. Now, yet again, I'm repeating this again. My euro dollar is losing few quid now. So anyway, I'll talk to you about it in a minute. You know that I take partial profit, so if the price spikes higher, I might be looking to take partial profits at around 91, move the stop loss at break even or above break even, and then look to take profits again around 92.50, 92.20, 93, where depending where the price goes, and I would likely be moving my stop higher, therefore protecting the stop, protecting the entry, and so on. So let me just see. Sorry guys, while I'm talking to you, I'm seeing my euro dollar trades reversing, and I do not really want to give all of that back. So let me show you where I am with euro dollar. So euro dollar is currently, oops, sorry. Euro dollar is currently breaking above my entry. This is a 15-minute candle. So this candle will still take some time before it finishes. This is the 5-minute candle. There is another 3 minutes before this candle completes. I'll wait and see how it settles and where it ends up. I might be stopped out. I might be stopped out. I don't know. This is where my stop is. Let's see. I'll keep you informed. I'll keep you informed on what's happening with that little trade. So I told you about FTSE, DAX, Dow Jones. We talked about gold. We talked about crude oil as well. Now we're going to go and check out a few currencies and take it from there. So let me just check that this is all going okay. Ah, it is. Okay. Happy with that. Told you about excellent. I was just checking that we are pushing through. Now let's talk about few currencies. Obviously the first one was euro dollar. I'll talk to you about that, and then I have a nice setup here in cable. That's definitely of interest as well. Sterling, euro dollar, euro dollar, euro dollar. Euro dollar appears to be downtrending heavily here. Okay, so this is a fairly significant downtrend, and this potentially looks like a breakout and now a retest of that kind of previous resistance trend line. This was all triggered by European Central Bank, Christine Lagarde's press conference subsequently, increase in inflation levels in Europe, and a firm belief by many market participants that European Central Bank will have to start hiking interest rates at some point throughout this year, and this is the surprise, or this was the surprise for the market. So therefore euro reacted to the upside. So if central bank, for those of you who are new and you don't know what it means, if central bank is hiking rates, they're tightening monetary policy, and that's normally perceived to be good for the currency. So if European Central Bank is hiking rates, that directly impacts the strength of euro currency against the basket of other currencies or other currency crosses like dollar, like sterling, like yen, like Aussie, and so on. Okay. So from the trend point of view, euro dollar is creating a pennant. Now, this type of price actions, if they break to, so from the daily point of view, I just want to show you this from a daily point of view. You're seeing a rally, 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 and then indecision here. This candle is called hanging man. Okay, so you have spinning top here. So you have push higher, push higher, push higher, push higher, green candle pushing higher quite nicely, big trading range, and then this narrow trading range forms. That means the wick represents the high and the low of the trading ranges. So this candle was really green at one point in time, and then it was also a red at some point in time, but it settled here just above where it opened. So this tells you that this is indecision. Bulls and bears are fighting. Bullish traders, people who were long, are unable to find anybody else who would buy it at the higher level, and maybe they're closing some of their longs. When they're closing longs, they need to sell. So that causes this kind of price action to form. Then this is called hanging man. It looks like a hammer, but it's just red, and it's found on the top of the trading ranges. And these, you can see one here as well. It looks like this, but up here. And there is another one which is forming here today. So they tend to be bearish, but there is some buying pressure here. There is some buying pressure here at the moment. The daily candle closing below this 14,000, one spot 14 on euro dollar, and forming a really a full red candle below that level would likely trigger a bearish reaction, which could then open the way for a push lower towards 1 spot 13, which is what I was looking for. I'm still in that trade, but the price is going higher, closer to my stop loss. So this would be a nice fib retracement and also the cluster of the previous lows. So 1 spot 13 would be a lovely take profit for anybody who's looking to short. Now, the alternative view is we see a bullish reaction. We see a breakout and a candle closing above here. So this is the previous resistance, newly found support. So breakout, a retest. Then that could trigger extension to the upside and a push towards 114.60, possibly even 114.80, 115 to the upside. So that's the reason why I want to get out of my short, because if this happens, then all bets are off. We could see another leg higher, and I don't want to be holding that position anymore. So that's where I am with the euro dollar, and I am still in that trade, barely, but currently showing a little loss. Here we go. So it's about $25 of loss on this trade. This is that 15-minute candle that I'm waiting for to tell me what to do. There's still another 5 minutes for this to complete. My stop is at the right level. This is where my stop is. Letting it go and see how it reacts. Okay, so that's where I am with euro dollar at the moment. So I would like to, if I wasn't short, I would be looking to short below 1.14 with the view to take profit at 113. Stop would be at 114.40, 114.30, so about 30, 40 points of risk for potentially 100 points of gain. So that's the basic premise. Okay, if the price breaks through 114.60, I would need to reassess this and decide if I am willing to go long euro dollar. And at the moment, I'm not. I'm more bullish US dollar than bullish euro. So I would be looking to buy US dollar in another currency pair. Anyway, so that's where I am with euro dollar. There's one more thing that I want to talk about as well. This is cable or sterling dollar. Sterling dollar cable. The key level that I'm paying attention to is at 135.20, which is this green line here. Cable created a higher low, and then this is a corrective pullback. So this appears to be, yet again, a very similar analysis here. Bank of England appears to be moving with the hike rates. The indications are that they might be doing it throughout 2022, and that causes sterling to strengthen and so on. So really this type of setup would look for more upside. People who know how to trade this type of setup, they would extend the widest point of this consolidation at the breakout, and this is where they're looking to take partial profits. For more speculative ones, they would be looking to take distance from the previous breakout, so high, lower high, extended, and then they would extend that to the upside, and then that gives them a take profit level, which is 136.90, 137.10, 20 on the upside. So that's where it looks like it could go. From the risk to reward ratio point of view, this looks really good. If I get filled at 135.20, the stop would be at 134.90, so it's about 30 points of risk for potentially this much of a gain. It could be almost 200 points of gain for 30 points of risk. So multiple risk to reward ratios here, and this looks more appealing from the kind of trading point of view. I like this type of setups because they give me a disproportionate amount of potential gain for much smaller and definite amount of risk that I was willing to take on this trade. That's where I'm with the sterling dollar. Not in this trade just yet. Waiting to see what might happen here, but that's where I am with sterling dollar at the moment. This is euro dollar. Euro dollar, that kind of 15-minute candle. There's one more minute. There's one more minute before the candle finishes. And if you remember, for those of you who went through the courses, for those of you who are watching this and are saying, what is this guy talking about? I'm completely confused. This is really, really simple. What I'm doing here is it's really, really simple. And I keep repeating, I feel that a novice trader or early stages intermediate trader should be able to do this. If you're not able to grasp what I'm doing, is then you need to go and read some more books, or go and attend the course, or find somebody who can help you out with this. This is very, very simple what I'm doing. So if you're looking for something like that, you can go and check it out on mytradingskills.com. There's plenty of free courses there. There is a course which actually covers this particular topic, the price action and the candlesticks. You are more than welcome to take it, see how it's taught, see the quality of the course, completely free with no payment. And if you like it, and you need help with more structured learning, feel free and check out some of our premium courses. But it's there for you, absolutely free. Okay, so what I'm looking at here is I'm looking at this candle here. If you remember, this was a 15-minute candle, and I kept saying I'm looking for a 15-minute candle to complete before I can read it. So this candle, although it was green, it looked like this earlier. Now it doesn't look as bullish as before. This is actually a bearish candle now. You see that there's a selling pressure, selling pressure, selling pressure, and this candle closed below where it opened. So this tells me that sellers are still dominant in this particular currency pair. Now I'm short euro dollar from this area here, previous low, previous low, previous low, therefore horizontal. That was the horizontal, loss of horizontal, and so on. This could be a loss of support, 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 loss of support, and now retest as a newly found resistance. So my stop is still at the same level, and I'm looking for a potential extension to the downside towards 1.13. So that's where I am with euro dollar at the moment. Still
player disconnected.
Sorry, still on this trade. US futures struggling for traction, and treasury yields rose as investors weighing prospects for economic growth and corporate earnings amid expectations for monetary tightening, according to this particular report. Nasdaq 100 fluctuated before turning lower, suggesting that technology stocks may again be under pressure when markets open. That's US markets. Contracts on the S&P 500, which is this market here, S&P 500, you might know it as US 500 or SPX, were little changed after Wall Street stocks on Monday ended in a choppy session in the red. Lots of people are talking about Peloton. You know what happened with them. Pfizer, Harley Davidson, Novavax, Nvidia. Okay, so these are individual stocks. We don't really have time to cover all of that here today. But hopefully you're finding this informative and you are enjoying it. Hopefully you're finding it beneficial. Need to know market risk. The European Chip Act will allow for 15 billion euros in extra public and private investments by 2030, on top of the 30 billion euros in existing public investments. People Bank of China, we will investigate infrastructure standards for digital fiat money.
Player disconnected.
German Health Ministry, Germany will be able to reopen long before Easter. Stocks open mixed with Nasdaq falling for second day, but the Dow is higher. So this is Dow. We talked about that. Very little, guys. This week is actually really quiet from the economic calendar point of view. I've posted the week ahead video already. So check it out if you're looking for key trading levels from kind of 4-hourly or hourly point of view for euro dollar. So Bitcoin, DAX or German 40, Nasdaq, euro dollar, sterling dollar, dollar yen, and also gold and WTI crude oil as well. That's all posted. It's called the week ahead video. You check it out, and you're more than welcome to let me know if you need something else covered as well. But that's where we are with the analysis so far. The last thing that I would normally talk about is dollar Japanese yen. And let me just do that very quickly, and then we will finish today's broadcast. So dollar yen, let me just remove some of this stuff. Dollar yen is uptrending, low, higher, low, higher, low. Now this is high, higher, high, lower, high. So this could be beginning of something else. But I am bullish US dollar. I am bullish US dollar because the indications are that Federal Reserve will likely carry on with hiking interest rates in US. So where to with dollar yen? So this here looks like a little consolidation here. So low, higher low. There we go. Good. So this is the previous swing high. Pause, pause, pause. 114.95. So those of you who watched some of these sessions before, you know I was buying dollar yen at 114, 113.90. Kept buying it there, looking for a push higher, and I was quite happy with some of these trades. They really played out well. So what I would like to do is I would like to see if we see a pullback to this area here, 114.95, and then from that area I would like to see a push higher, and then retest of these highs up here towards 116, 116.20. So this is another reason why this area here is of interest. So it's a zone, so it's a horizontal, it's a trend line, it's a fib cluster. So there's a number of things which potentially look positive for dollar Japanese yen. This is dollar Japanese yen. So pullback to 115 with a stop at 114.70 or thereabout. It's about 30 points of risk with a view to take profit higher. So partial profits at these highs here at 115.70 and then 116, 116.20 on the upside. If that happens, I would move the stop at break even, stop above entry, stop above entry. So take partial profits and then move the stop higher. So that's what I would normally do in this type of scenario. Okay, we've covered a lot actually, and for those of you who watched these YouTube sessions before, this is a little bit more in depth, and yet again I don't necessarily want to be spending too much of my time explaining things into minute details. I know.
Disconnected.
Sorry, my audio is playing up. I don't know. Anyway, but if you need to know more, check out my trading skills for the courses. If you're looking for a community, check out TraderCast.com. I'll just finish this broadcast with showing you that euro-dollar trade. This is still open. I'm keeping it open, looking for the extension to the downside. The stop is here. I'll be moving the stop at break even if I get a chance. I might even take some partial profits down here. 114 again, 113.80, 113.50. Along the way to 113 I might be taking partial profits. I'll see, but definitely moving my stop at entry to protect myself. So hopefully this was all informative and beneficial, and hopefully you found it useful. So this is what I currently have open, and this is a big disclaimer. So thank you all very much for watching and listening. Stay safe, happy trading, and bye for now, and I'll talk to you all tomorrow. Thanks for watching. Bye.